Pickup trucks helping to power Ford Motors' third quarter results. The automaker's bet on a lighter, more fuel-efficient aluminum truck appears to be paying off. Let's take a look at the numbers. Ford earned 45 cents a share, a penny short of forecast, but up substantially from the same period a year ago. On the top line, the automaker saw sales of roughly $36 billion, a little bit above forecast. Ford Motors CFO Bob Shanks joins us from Ford HQ with more. Bob, great to see you again.
Thanks, Ruben. It's great to be with you today.
Now, we saw F-150 sales firing on all cylinders. We saw margins up from the same time last year. How long do you expect this momentum to continue?
Well, there's no sign that the momentum in the U.S. and North America is going to stop anytime soon. All the economic leading indicators that we look at for the overall economy appear to be either neutral or positive. When we look at outside forecast calls for the industry between now and 2020, everyone's looking at anywhere between 17 to 18 million units, and I think one or two of them are even higher than that. So, putting aside a fiscal or a monetary policy mistake or an external shock, I think that we're looking at modest growth in the U.S. and continued maybe modest growth in the U.S. industry, but at very, very high levels.
Now, we've started to see an impact from that VW crisis have an impact on diesel sales in Europe. Are you seeing an uptick in sales of cars that compete with those VW models?
I think we're seeing some isolated opportunities on the fleet side of the business, but I think it's probably too early to tell. We're certainly looking very closely at what's going to happen on the regulatory front in Europe, and we're talking with regulators there about how we can all collectively as an industry move more towards real-world driving conditions in the testing environment in Europe. But I think so far, we are growing in Europe. The industry's up, and our share in Europe was up once again in the quarter. So, things are looking good in Europe. The loss was reduced by 60%. So we really like the track that we're on in Europe right now.
Now, sales in Europe, as you mentioned, were up, but they were down in South America, Asia, and in the Middle East. Over the next 12 months, where do you see the biggest challenges for Ford?
I think the biggest challenges are going to be largely around some of the emerging markets. We still don't see a sign yet in South America that we've hit bottom. I think the team's done a fantastic job of shaping the business around the environment that they're in, but clearly, we need to see some improvement in that environment. I think Russia's another example. Still very tough there with the very low oil price. We're doing well on share, and certainly the new products we've introduced are doing well in terms of how they how consumers are responding to them. So I guess I would cite those emerging market areas as the ones that we've got a lot of work to do. But unfortunately, a lot of it's going to be driven by what happens in the external environment too.
Now, market share in China unchanged from a year ago. Was that a disappointment?
Well, it was equal to the previous quarterly record that we set. We are looking forward to the fourth quarter when we're going to have full availability of most of the new products that we've launched in Asia Pacific, and that includes China, as well as take advantage of a couple of new plants that opened within this year. So one of the things we did talk about this morning, Ruben, is that we expect our fourth quarter in Asia Pacific, a lot of that driven by China, to likely be a record in terms of pre-tax results.
Now, Ford and UAW about to start contract negotiations. Could we see an impact from those negotiations in the fourth quarter if there are raises like what we saw at GM?
Well, we don't have any insight in terms of all the details of the GM agreement. Obviously, we understand what happened at Fiat Chrysler. Even at the beginning of this year, we make assumptions around financial assumptions around what the UAW contract settlement would mean, and we've provisioned for that in our call for the fourth quarter and the full year. So there'll be some aspects that will get booked in the fourth quarter, but we think we already have covered that in our guidance.
Looking ahead to 2016, what's that year going to look like? Is it going to continue? Are we going to continue to see the momentum that we've seen here in the U.S. at least in terms of vehicle sales?
Well, we'll provide more information and insights in terms of what we see for 2016 early next year. But one of the things we did talk about today is how good we feel about the track that we're on this year. We continue to see a stronger second half than a first half. So that's clearly setting up a run rate that we think is going to bode well for the business as we move into next year.
Thanks, Bob. Great to talk to you again.
Okay, Ruben, thanks a lot. Appreciate it.
That was Bob Shanks, CFO at Ford Motor. In New York, I'm Ruben Ramirez, and you're watching The Street.